Crypto being is 69 coming back at you guys. 269 coming back. Alright guys, we gotta look at these charts. This is a Dogelon Mars in-depth analysis. We have seen some major red. We're currently down 25%. Bitcoin is down 14% today, guys. This has came out of nowhere. Absolutely nowhere. Broken those $20,000 levels. We were holding those $20,000 levels for a good little bit, but it seems as though those supports are invalidated. Because my goodness, look at this major red action here. Jeez Louise. Okay, this is very important. This could be a fake out. Let's go ahead and zoom out and see what resistance support we're looking at. So the $14,000 levels is one support that we have. Another one is around these $16,000 levels, which I'm pretty sure we have already almost come down and touched. We're currently at the 16,790 levels. 16,168 levels is our next level of support, okay? Now, keep in mind this could be a fake out, okay? Very, very much could be. So we got to watch, but this came out of nowhere, guys. This just shows you how volatile these crypto markets can be. You really just don't know what you're getting into. But also keep in mind, what goes down must come up. What goes up must come down. So, all you day traders and long-term investors, we are back in those two levels like we have been, for a while now. However, look at this volume. Spiked, going crazy. We saw a major buyer step in here, but Bitcoin didn't do what it needs to do in order for Dogelon Mars to spike. And what Bitcoin needs to do is continue up towards those $30,000 levels. So we're going to have to keep our eye on these charts and wait until we see some nice support. That will be a nice buying opportunity once we see support. However, right now it's a waiting game, my friends. Let's get into Dogelon Mars. I'm going to drop time frames for all you crazy day traders out there trading these volatile markets. Crypto being a 69. Hope you guys are having a great day. Let's get straight into the charts. So, as we can see, let's go ahead and draw this Fibonacci. Swing low, so to swing high. We have broken through these 0.786 levels with ease. We saw a little bit of support here. Bounced off once, twice, 3 times, and then just busted through it. So, what do we need to watch now? We got to watch all the way down at these 2600 levels, which we are pretty much testing at this moment. We have seen a couple candle wicks go through that all the way down to these 2512 levels. 25 levels. Very important to watch. Right now, the markets are hard to predict if you are playing the short-term game. So, it's best to play long-term and continue to average in. Because as we get lower, the more you can get. And then once it starts to go back up, you will make double your profits if you continue to average in and move that break even lower. All you day traders, very important to watch these levels as well. We're going to wait for a nice level of support. Once you see that confirmation candle, it would be a good buy. Like right here, for example, breakout. Let's go ahead and play hypotheticals. Right here, if we were day trading this, I'm going to go ahead and zoom in so you guys can see a little bit more in depth. If you guys were playing this as a day trader, you see this break through the first level of resistance easy with good volume, pushing higher. That's your first sign. Wait for that retracement, comes back down, and then if you draw this Fibonacci retracement tool out, you should see a simple pattern that we've seen in the past very much so before. Comes down to these 0.5 levels. Very, very important. And once you start seeing this, the buyer step back in, it's a momentum change, which means you got to keep your eyes on the charts very, very glued, okay? Because what we are looking for at this moment in time is a big green candle busting through the top of this red body here. I'm going to zoom in again. So that's what we're looking for after we see this 0.5 level is confirmed, is holding support. It's not confirmed yet. in order for it to be confirmed, it needs to break through these 2804s. And once it does, it would be a wise decision to add bags, okay? And add major bags at that. So let's see what it did. Next candle, these are 4 hourly candles. We see that, okay? It busted through the top and retraced back down. Very important. If I was day trading, I would get in right as it is breaking through here and wait. If you start to see that retracement back down, you can shave some position sizing off. However, what did we see? We saw another breakthrough, very bullish with volume. These are 2 confirmation candles. If we get a third one breaking through the top at this 2.9 level, it's very, very wise to go all in. And then I will show you guys how to measure when you should get out. So I'm going to go ahead and show you. Now this is in-depth material right here. This is course material, my friends. So pay attention, my friends. This can make you a lot of money. So as you can see, we measured this trend line here. And that is what we would want to watch for as it breaks to the top. Very, very simple. So what does it do, my friends? Does it break through the top? Let's go ahead and see. And it breaks through, however, it retraces back below it. At this point in time, it's still bullish, okay? It's still closed in a green candle. It still broke through. It's just a matter of time and waiting until there's buyers step back in to push it higher. See what it does? Look at this, okay? Look at this. As it spikes all the way back up, look where it went. All the way to the top of that line. This is very, very, that would be a nice moment in time to shave some of your profits off. And maybe shave 25% off. 50% if you're feeling very confident. However, let's see what it does after that. It moves even higher, almost double as high as this trend line. This is an outlier, and this is why you don't take complete profits as you hit your profit targets. Now, let's say you have a deadline, you have to get somewhere, you have a date, okay? You never want to leave a day trade going when you're out. You can lose a lot of money that way. Unless you have stop losses in place, preferably trailing stops. Very, very important to always watch the charts whenever you are day trading. Don't get lazy with it. Whenever you get lazy with it, even though you might make money a couple times, you will eventually lose a lot of money. Happens to the best of us, my friends. Learn from my mistakes. You don't have to make the same ones. So, went up. Right now, if you're smart, you still have 50% of your portfolio. You're holding. At this point in time, you can go ahead, grab this fib retracement tool, swing low to swing high, and we're going to watch and see if there's a little retracement because this is a lot of buying pressure. So, as we can see, this is almost a perfect 3-bar play. We saw a little bit of this third candle here, but if we didn't see that, look at this, guys. Look at this. It comes all the way up showing major buying pressure and then retraces down and closes at the bottom. This right here is still, even though it closed in a red candle, it's still a very bullish sign because we have seen these buyers step in. They show their confidence, and then it closes down at these sellers. All this is showing is that whoever got in around these 3 candles here is just taking some profits off like they should, okay? Now, what happens after this? We see another huge green candle coming all the way up to those 4700 levels. Same thing, we're just going to put this back up to here. Look for that retracement. Rinse and repeat. We saw the retracement coming. We saw some buying pressure coming all the way up to these 5781 levels, okay? Again, take profits. If you're currently holding 50% from here, it's important if you make it all the way up to here to continue to take those profits off, because as long as you take profits, you will never lose money, and there's always more trades to be made like this. Okay, this happens on a day-to-day basis, and there's no point of feeling like you're going to miss out on money, because then you'll make very unwise decisions. As it comes down, this is one that you definitely want to keep your eye on because it is showing a lot of bearish momentum at this point in time. As we have pushed all the way up, we have seen major sellers step in to start and push it down. Let's go ahead and see what happens in the next candle. There you go. All right, very, very important. Again, We are losing momentum. However, it is holding above these 0.236 levels. It is important for us to see a break through these 4827 levels on the next candle in order for this to stay considered a bullish pattern. What did we see? We saw that break. Okay, very important. Right now, it's good. Keep holding your position. If it dips back through here, it's showing weakness in the market, which means you might want to shave a little bit back off. However, if it continues up, keep holding. You see that? Weakness in the markets. It's important to shave a couple profits off. Keep holding some bags if you are fulfilled with this trade, then go ahead and just sell your entire portfolio. Call it a day. Go have lunch with the wife. Go take the kids to play some soccer. But my friends, there's no need to be greedy. If you're making money in the markets, you can do it on a consistent basis, and you don't have to spend hours and hours watching these charts. Now, these are the four hourly candles, okay? So keep in mind, each one of these candles is 4 hours. 4 hours. That's a long time to be sitting behind a computer. So I urge you, if you are trading, day trading, try and get a platform like NinjaTrader, for example, that has trailing stops. Trailing stops are very important because if you were to leave the trade for a little bit, what a trailing stop does is as the price is going higher, the stop loss will follow the price so that if it comes back down, it'll just take profit. Okay, very important, because the last thing you want, oh, look at that doji candle. The last thing you want is for it to crash and then you're back down to here where you took 50% out, and then you keep holding because you think it's going to go higher, but it keeps dropping, and then you just lost all the money you made on that 50% trade. So very important to stay conservative and take profits when you can. This is showing weakness in the markets. However, we are still continuing to make higher lows and holding above these 0.236 levels. It is important to watch these 0.236 levels because if we did break below these on the next candle, what I would do is get out of the position entirely. Okay, call it a day, go have some lunch. That's exactly what we saw. Okay, so if I was live trading this, as it starts to break these 4303 levels at this 0.236 Fibonacci level, I would just exit my portfolio there. What do we see in the next? Okay, we see a little bit of buyer step back in. Doji. Very volume tapering down. It's just a matter of waiting at this point. Creating a little bowl formation. Pushing back higher than these 236s again. Now, if I were to come back and look at this again, this is probably a day later. 4, 8, 12, a long time. 4 hourly candles. Okay. As you can see, the volume's just not there. You can still trade it, don't get me wrong. However, it's not going to be those exponential moves that we saw in the past. As we can see, the volume's tapering down. It hasn't broken through previous highs, and I really wouldn't have given it any thought until it did break through these previous highs. We saw a little spike here. It's just a fake out. The meat of the move is right in the beginning most of the time. If you can catch this meat here, boom, going up, then you'll be golden. Right here, as the volume is pretty much down, you don't really want to touch it. But as you can see here, let's just notice the differences between these two trades. So the context between this trade here, as it broke through the top of these two double tops, is we did seize a couple candles, right? But look at the volume. The volume is not there, which indicates the buyers aren't there, which indicates we're not going to see another exponential move. If you come back to here, look at the volume compared to what we saw in the past. Let's go ahead and go back to here. Okay. As it approached the top of this resistance line at the top of this previous resistance, at the top of this wick of the candle, the volume was decent. It wasn't small like this, which is what we saw in the other one. It was bigger, in fact, on the first candle, a little bit smaller on the second, and a little bit even smaller on the third, but creating higher lows. And it hasn't broken through the top of this. Right at this moment in time, you should not be eager to take a trade. But when it does, or if it does break through the top of this, then you should be eager to get in, which it did. And we saw that major confirmation candle. You see the difference? It's different, a lot different. We saw this volume overbearing all this previous resistance, huge confirmation candle, perfect example of it. And then as we can tell, it just took off. But on the flip side, as you can see with this one, we didn't see that. We did see some volume. However, it just didn't pan out. We saw a lot of selling pressure in this candle as well, which indicates that the buyers aren't very serious about pushing this level to new highs. That being said, we are currently down back where we started. We will most likely see a couple hours or days worth of consolidation before moving higher. And keep in mind, my friends, all of this stems off of Bitcoin. If Bitcoin continues to drop down to these $13,000, $14,000 levels, so will Dogelon Mars. We will probably see it back in these high ones, breaking these previous supports around these twos. If we did hypothetically drop on Bitcoin. However, this is a perfect example of a successful day trade that one can make if they know what to look for. And what to look for, it's very simple. Look for volume, look for overbearing previous resistance. Okay? If you can see that and all the factors line up, there's multiple factors that you need to see before you can be confident making a trade. One of those is a breakout. Very, very simple, guys. A breakout pattern is one of the easiest plays to trade and make money with, which is just put it at the previous all-time high, which is right here. As it breaks out, get in and hold, okay? And shave profits as it starts to show weakness. Very, very simple. That being said, Crypto Billionaire 69, I hope you guys are having a great day. And I hope you guys are learning. I hope these videos help you. And if they do, if you guys have any questions, leave them in the comment section. I will make sure to get back to you. If you want to contact me personally, I'll leave my email in the description. It's mycryptomoves@gmail.com. Go ahead and shoot me one if you need to ask me anything in private. So I will catch you guys in the next video. Maybe later tonight, maybe tomorrow. Crypto Billionaire 69 out.